Hi everyone, this will be a tutorial of how to model a sample residential customer in the OnGrid tool. Before watching this tutorial, please watch the overview video first. Also, feel free to follow along with your own copy of the tool. We'll begin in the input sheet, as you can see down here, and convert to full view at the top left. I'll also open up each section to level 2 by clicking the 2 in the color legend. Now, this tutorial is not going to go line by line, but will focus on the most important elements for creating a residential proposal. If I skip any lines, it's because they're not very important, or you can get back to them later. I'll begin by entering in the customer's name, and full address. And I'll skip the rest of the customer information section for now. They're not very important, and you can do them later on. For this next section, I'll select the utility and rate schedule from the customer's electric bill, which in this case will be Pacific Gas and Electric, or PG&E. That's already selected, so that's good, but if the customer is on another utility, you'd select that utility. Customer is on E8 instead of E1, so I'll choose that. Now notice there's a reset dot to the left. This appears when anything's changed from the default. To go back to the default, click on the dot. Now you see it goes back to E1, but of course the customer is E8, so I'll select E8 again. The tool by default suggests a rate schedule for the customer to go on after they install solar. In this case, it's E6. E6 has high energy rates, which makes it a solar-friendly rate. But you want to be careful with this because if the system isn't sized large enough relative to usage, the customer will end up paying for the remaining usage at these higher energy rates. That could result in a higher new bill and a lower rate of return. In these cases, you can have the customer stay on the same rate schedule. But for now, let's leave it at E6. You can come back and change it if it's not appropriate. These next two inputs only appear for the investor-owned utilities in California and will not show up for other utilities. The first is to choose which territory your customer is in, and the second is to indicate whether the bill is for electricity or gas, or for electricity or gas and electricity. For example, let's say the bill specifies the E8 rate schedule followed by the two-letter code TB. In this context, that means they're in the T territory code, and that the bill is for both electricity and gas, which is represented by the letter B. It's already selected. Now the customer is in Oakland, California, which has a utility users tax of 7.5%. So I'll enter that in. Normally you can see if a local tax exists by looking at the customer's bill. If the customer's locality has no tax, leave this as 0. Notice that as I enter this in, the facts and figures in the summary pane above also change. This summary pane automatically updates as key inputs in the tool are changed. So if I switch this to 0 again, it changes, go back to 7.5. The next part is entering in the customer's monthly usage. Enter in these numbers for now. Start at 600, go up by 20. Go down by 20. The next part is about time of use percentages. These specify how much energy is being used in each time of use period. For residential, there usually isn't too much deviation from the tool's assumptions, so you can go ahead and skip this for now. You can skip these 3 subsections for now as well. The next part is solar system and site variables. Choose San Francisco, already selected, as the weather station closest to my customer in Oakland. And I'll enter in which way the panels are facing here. This can be obtained through third-party tools or by a site visit. In this case, they have one roof plane facing 175 degrees with a 22-degree slope. But they also have another roof plane suitable for solar, so I'll set the number of rays to 2 and enter in the details for that. In this case, it's 275, 22. These roofs have no shading, so I'll skip that. Next up, I'll also change the roof type to Spanish tile. And you can skip the rest of this section. For system sizing and specifications, the first thing is actually to select the modules and inverters applicable to this project. For this tutorial, I'm going to leave it as these Canadian panels and switch the inverter to this. I want the sizing basis for this project to be SDC, so I'll choose that here. The customer's roof can only fit 6 modules on the second west array and 10 modules on the first south array, so I'll enter that in. And one type of this inverter is enough for both roof planes, so I can set the second inverter to 0. The next section is incentives. For this particular customer in Oakland, California, there are no incentives besides the federal investment tax credit. So the tool's assumptions here are correct. For other utilities and states, you'd want to make sure the right incentives are modeled. Next up is pricing. If you know what price per watt your company has, for example, $4 per watt, you can enter it in here. Now notice the tool automatically included additional costs for installing on a Spanish tile roof. You might want to adjust this cost or eliminate it per your preference. So I'm going to go ahead and eliminate it. Rest of the pricing section looks good, so let's get to financing. Here I'll select a home equity loan for my customer. The financial institution I have in mind offers a 20-year 5% loan with no down payment, so I'll enter those terms in. Alright, I'm pretty much done with inputting the most important information in the input sheet, so I'll go to the overview sheet here and check out some numbers and charts. This chart is used to calculate IRR. It's a cash flow chart. And if I scroll down, I can see how solar compares with not getting solar. You can see the customer pays less for electricity immediately and pays less dramatically at year 13. That's when the loan payment is paid off. There's a spike at year 15 for the inverter replacement. Then afterwards, it's just a lot of savings. Notice that though the loan is set to 20 years, it's paid off at year 13. That's because the tool assumes the customer will help pay off the loan principal with the federal ITC, as you can see here. If you want the loan to still go out to 20 years in the process, lower the monthly payment, you can go back to the input sheet and select a year to re-amortize the loan. Since the federal tax credit comes in at year 1, I'll choose year 1. Now if I go back to the overview sheet, the loan pays off after 20 years. And since the loan payment is lower after year 1, the customer saves more sooner, although there's less savings in the end because the principal isn't paid off as quickly. Now, one common financing arrangement nowadays is to have a bridge loan to cover the amount of the federal tax credit and another loan to cover the rest. To model that, first I'll reset the financing section and set layer 2 of the capital stack to be a personal loan. Now, it doesn't actually matter if it's a personal loan or home equity loan. The functionality is the same, but the descriptions are different. I can edit the description and call it a bridge loan. To set the amount of the bridge loan, I'll scroll up and find out what the tax credit amount is. In this case, it's $49.50. I'll scroll down and set that as the amount. And set the term length to be 1 year with 0% interest. For the second loan, you can choose home equity loan and name it how you want. In this case, I'll call it main loan. I'll set the terms as before, 20 years at 5%. Now notice there's no option here to re-amortize, and that's because the federal tax credit was used to pay off the bridge loan, and there are no more incentives for this particular customer that could go towards the principal. But you can set it so that a portion of the bill savings goes towards loan principal, and that's actually in level 3, so it can get to level 3. So let's say I have half of the bill savings goes towards the principal. Oh, actually, sorry, this is the second one. So let's say I have 50% go towards the loan principal for the second loan, and you can see the option to re-amortize appears again. Now let's save this now, but this time entering in a scenario name here in the customer information section and calling it loan. Now you can put anything in this line to help you differentiate between different scenarios. In this case, I'm going to differentiate them by having different financing solutions. And I'll save. All right, saved. And when I go to load this scenario, you can see this scenario name here. Afterwards, I can generate a proposal that's specific to loans, like so. Let's wait a bit. All right, and this is what it looks like. Now I can email or print this proposal if I want to. But before doing that, I'm going to close this and select another financing solution for my customer. In this case, it will be a lease. So go down to the financing section, reset, and select a residential lease. Now, because this is a lease, the tool is requiring that the host customer is not the system owner, which is a setting that has to be changed in the customer information section. I'll hit yes to go there. And I'll select no here. You can see that an area to edit the owner's info appears, but I can do this later, so I'll get back to the financing section. And select lease again. Here I'll edit some of the terms of the lease. I'll set the lease payment amount to be 75% of the first month's bill savings for 20 years. I'll leave the escalator at 3%, but I'll remove the buyout price from the cash flow so that this remains a pure operating lease. Now let's see how this looks for the customer here in the overview sheet. As you can see, it's very smooth and straightforward. The customer saves money immediately and consistently, but compared to the loan we set up before, they're not going to save as much. Now go back to the scenario name here in the input sheet. And enter in lease. I'll save. You can also create a lease focus proposal. And again, we'll wait a bit until it generates. And again, I can email or print this proposal for my customer. Alright, this is the end of the tutorial. I hope you found this video useful, and for more videos, please check out our YouTube page.